Unimech Aerospace made a very strong debut on the bourses. It listed at a premium of about 86% to its issue price. And, we caught up with the management on the road ahead, as well as, the use of the proceeds for the IPO. Listen into this very special conversation.
So we are a high-mix, low-volume product manufacturer, predominantly into aerospace tooling and ground support equipment and precision components. So the two offerings are aero toolings and ground support equipments, predominantly for commercial aviation. Now we are expanding to defense sectors as well. And coming to precision components, we cater to aerospace, defense, energy, and semiconductor industries. They are kind of very high complex and high volume, low volume in nature, and also they come with sub-assemblies and subsystems kind of offerings. And coming to proceeds, we are raising 250 crore of fresh issue, and out of which we are using it for working capital and capex purposes. Capex happens in two phases actually. The first phase with a lot of CNC machines, equipments, and the building, the infrastructure, those aspects, and the second tranche comes in next to 12 to 18 months.
Okay, Mr. Ramakrishna, coming to you now, the total debt position, if we see, that stands at around 70 crore. With the use of proceeds, I want to understand what's the debt picture going to be like at the end of FY25, and are there plans to becoming a debt-free company forward?
Yeah, sure. So we have a total debt of 70 CR. Out of that, now we are going to repay 40 CR. So by end of this financial year, we will be having 30 CR outstanding in our books, debt outstanding in our books. However, we are not going to be debt free to the extent of working capital debt. Will continue to keep on our books.
All right.
So yeah, that will continue for a longer time.
Okay, so the debt would continue to remain. But coming to the performance that you have, Mr. Kumar, Mr. Ramakrishna, any one of you all can address this. You've seen about 100% plus growth in the last two fiscals. Want to understand, now this is aided by the kind of capacity expansion that we've seen. So considering that further capex is being done, I want to break it up in two parts. What is the overall additional capacity that can be expected by the end of financial year FY25 along with FY26 as well? And this 100% plus growth that we are seeing in terms of revenue, is this expected to continue in the next 2 years as well?
Yeah, so in terms of capacity expansion, as you would see in our prospects also, RHP document also we have mentioned. So while the expected capacity addition is in the range of 2 to 2.5 times, from the current base. So that, as Anil mentioned, it's going to be added up in next 12 to 18 months time frame. So while a one-time capacity expansion would definitely going to 1.5 times capacity expansion would definitely going to complete by March this financial year, and another 1.5 times will get completed. So the growth perspective, we are confident that it will be aligned in line with the kind of capacity expansion as what we have seen in the previously. So it's going to continue.
And also, if you can give us a margin picture as well, because if FY23 to 24, we've seen a substantial pickup in terms of where margins are also concerned. Just 37%, almost 37% in FY23 to 40.4% in the first half of this financial year. So what is the sustainable range that we would look forward for margins as well?
See, while we are aiming for higher margin product lines, the indicative margins would be at least 20 plus kind of range. In the first quarter was an exceptional quarter, I would say, because we did a lot of high value products, high complex products where you would have a good margin. But I would love to have those kind of product line, but I'm hoping even if we are above 20-22%, I think should be decent.
All right, Mr. Kumar, fair to understand that. Now, coming to the business that you operate in, it's a business where there are high barriers of entry that we are seeing. So, considering that, I want to understand your positioning in the industry that you are in. How many players are there? What is the kind of market share that you have? And what is it in terms of growth? Because if you see the mix of your business, 90% of the business is from the export side. So is there plans to diversify and increase the mix from domestic, or this will be the number that we'll continue to see in the future as well?
Yeah, so, the growth is like, we are trying to diversify. We are already working on a couple of other segments other than aerospace, like, nuclear, defense, semiconductor and energy. While we have already presence on these segments, it's still an emerging segment for us in the business. And coming to exports, okay, so since the aerospace industry predominantly, aerospace industry OEMs are predominantly based in the overseas, especially the western part of the world. So we happen to kind of be export-oriented company since we are a predominantly aerospace manufacturer. 95% of our revenue comes from aerospace. Okay, so we are already looking at diversification, and there is a huge TAM addressable in the precision segment area where we have just scratched the surface yet. And while we are expanding the capacity, I think we should be able to grab more and more opportunity in the precision segment area.
Fair. Does this diversification pertain to the kind of increase in terms of the customers also? Because if you look at the mix, around top 5 customers make up for 90% plus mix. In fact, even in the top 2, you're seeing about a 90% of mix of your revenue coming from that side. So are there plans on diversifying that as well? And other than that also, if you can just outline the key growth drivers that we should be looking forward for the business.
Yeah, I agree. From a diversification, customer concentration point of view, yes, I agree. We have a high customer concentration. While if you look at our customer portfolio, last 1.5 years, we have added more than 10-12 customers. They started giving us revenue. We are kind of, they are kind of emerging customers for us. Okay, so already we are in the process of, de-risking those customer concentration aspects. But at the same time, I wouldn't consider this as a big risk, the current customer concentration, because these customers are working with us from the year one, and more and more you do, more and more business you do with them in a quality manner, an on-timely manner, definitely we would be in a safer hand. And these, with the kind of high entry barrier nature, these customers wouldn't always look at exploring more and more suppliers and considering the safety critical aspects of this business.
Well, that's the management of Unimech Aerospace. A very happy new year indeed for all retail investors who got that allotment up 84%.